Mic check, mic check. What's going on, everyone? Good morning, good afternoon, good evening, wherever you are right now in the world. I am so glad that you are here. This is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. Getting ready to look at the markets with you all this morning. I hope you all well and doing great. The title of this video is whether or not this is a bull market, the beginning of a bull market, which usually at the beginning of a bear market, very few realize it, or likely a bull trap. Lots of people positioned here for a bull trap. Let's take a look at that over here as future positions remain the most short since 2016. And either that means that we have a lot of traders on the right side of the market, or actually they are about to provide some upside liquidity. I think, and unfortunately, that is all dependent on what happens later this week out of Jackson Hole when Fed Chairman Powell speaks Friday, 10 a.m. Eastern time. And that is going to really set the tone going forward up until the following week when we have non-farm payrolls first Friday of the month, right? And then after that, we're going to have, when is it? On the 14th? Is it CPI? 14th on the nope, that's PPI. When is the CPI? Does anyone know or have a heads up? Please let me know. I'm not exactly sure when it is. There we go. We got US CPI coming out on the 13th of September. And then we have on the 28th, come on, George, where you at? The 21st, FOMC press conference of September. September, normally, seasonally, a very volatile month. And that volatility normally to the downside. Lots of people are positioned for the downside. Lots of people have a very strong bias to the downside. We're going to do our best just to make sure that we're able to take a look at the charts and trade what's happening rather than having a bias. You could see over here, I need to pull up a pointer. I know, look, I'm getting back into the groove over here of these morning live streams. We have 6 kids in the household getting ready for school around the same time. It makes it prep a little bit difficult, but we will find the flow. There's no question about that. It's our 3rd day live here, right? Let me go ahead and just pull out my paintbrush, enter ghost mode, and then boom, bam, we're okay. So what I want to show you over here is whether or not this over here was actually the bull trap that sprung. You could see over here that upside breakout out of this descending channel. And a lot of people, this is late. It's a technical breakout. It's a bullish event up until yesterday when we traded below what we called the technical breakdown. That was the trading price trading below this low over here, which was 2 Wednesdays ago. This was 2 weeks ago on the CPI print. Before CPI, you saw price trading down. And then after that number came in lower than the previous month, 9.1, 8.5%, price not only started, let's say, spiking up, but then it was able to break out of that descending channel, retest it, and then resume out. That was a technical breakout. But since then, it's broken down. So if that was a trap, right, it seems to me if you wanted to take any type of short position, and even if you just lined it up off of a classic trendline break over here, and you could see that, but like that was a good place to short. Now, I was not be looking to short the market over there because of the technical breakout, and also because of the awareness of knowing that Jerome was speaking this Friday, right? So, but a lot of people were looking to take a short over it. It's a good position. It's only a good position because you're able to go ahead and measure your risk. If your entry is over here around this point, and that's your risk, if price goes ahead and fades and makes a higher high, that's where you're exiting the trade. You're just wrong. It's okay to be wrong. Expect to be wrong very often. It's good to be wrong. It's a question of when you're right, making sure you manage that trade correctly. And it's a question of when you're wrong, making sure that you stick to your strategy and getting out at the appropriate risk level. The game is all money management or largely money management. Juan, great to see you in here this morning. Yeah, my wife is a saint. There's no question about that. Dave, we had to play a little bit of honeymoon this morning. Got it just to bring back that old vibe. Bakanet, my brother, great to see you in here, as well as everyone. Soul with the dollar sign. We have tomorrow, by the way, on the calendar. We do have let me let you all read it. How about that one? There we go. Preliminary GDP. That's a big one. If there's any surprises, that could catch a lot of people off. Now, everyone obviously is already positioned for the negative. By the way, did you notice? What was that funny meme? China, 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 China. And that's all you hear right now is China's falling apart. It's going to be, right? And that's true. And you should be aware of everything that's going around all the time. But the thing is, you know, I have the meme that the markets are not crashing. It's very far and few between that the markets are actually crashing. If you lived what was going on, and we caught it here beautifully, the crash that occurred late February into March 2020, that's when the markets were crashing. You remember every day you'd wake up and the markets were limit down. That's the markets crashing, right? And again, I hope if it happens again that we're there to pick it up. This 2022, the markets have been correcting. The markets are in a bear market, and it's been a ruthless, slow motion train wreck. You could say, well, that was a slow motion crash. Yeah, you could say that. That's correct. I'll buy that. But that's not really the markets are crashing. And usually what markets are doing is climbing a wall of worry. It's why that throughout the decade of 2010 to 2020, this could work both ways. So let's take a look at this, by the way. Throughout 2010, can I zoom out a little bit here? Get a better time frame. As the markets were going up for a decade straight, people kept trying to like pick the top and sell the top. They were so used to the decade before when you had the dot-com bubble bust, right? And then you had the 2008 crisis. and they're so used to markets actually in turmoil that the whole time the markets are going up over here, they're trying to go ahead and sell and pick the top, and right, and that went on for about 8-9 years. And then finally, a lot of people obviously got to ride this up. But even throughout this, let's call it as it is, forget what we were doing and how we were doing it throughout, from the bottom up until like through the beginning of 2021. You kept hearing lots of experts, lots of market analysts calling for some type of insolvency event, and we're going to test the lows. And they give, that's not what happened. Markets usually are climbing a wall of worry. Now, we're going to jump into a smaller time frame, the 8-hour. This is the time frame over here that I like to go ahead and make my living, and we're going to follow what's happening. And instead of saying, well, you know what, right now I'm bullish on the market, right now I'm bearish on the market, we're going to say, I don't have a bias. It's impossible for me right now to try to predict what is going to be happening 6 months from now. It is truly, truly impossible to try to predict what's happening 12 to 18 months from now. It's just not the environment to do that. It is not Goldilocks right now. It is a lot of uncertainty, and things could change quickly and drastically. By the way, as far as things changing, one thing that's of note, we've been talking a lot about Europe. We're talking a lot about Japan, how their energy insufficient, weighing specifically on their currencies. Yes, the rising yields in the U.S. also putting pressure on the Bank of Japan to go ahead and defend their yield curve, printing more yen. It's causing the weakness in the yen as well. But both those countries are energy insufficient. Japan is deciding, even in the wake of Fukushima, to go ahead and restart their nuclear power plants. That's a check mark towards Japan. Hey, how about looking at that cross? Let's take a look first of all at the euro and the Japanese yen. Let's see where we're at right now. Let me start with a high time frame just to get an idea. And look at that. So the euro has been outperforming Japanese yen, right? Did you hear that? Do you hear my tone slow down? Did you hear the uncertainty? That's signal right there. Signal is like indecision, not being clear. That's clarity right there. So, I mean, obviously a strong uptrend. We continue being a strong uptrend. Right away, I was looking for where a potential breakdown could be. But you know what? That's full of bias. I don't want any bias. We'll come back to that. I think we're going to look at FX today. Let me jump back over to finish what I wanted to talk about first, starting on the NASDAQ. And that over here is that we don't know what happens next. The markets are truly data dependent. This morning, we started off this session by looking at a few different data points that are upcoming. Now, it's just a few. We were not focusing in on PMIs, very important, but we were focusing on things that could actually allow the Fed to go ahead and clarify their policy action. The Fed is the driver of the markets. We're looking at things like the jobs, and we're looking at things like inflation. Just rough sketches, headline numbers over here, right? And those are things that we will be watching. We're data dependent, meaning what happens as far as the prints, not only in through September, also October, that's going to be forming the Fed policy for the near term. Things could change and change quickly. Again, one thing that I like to point out is that if we start seeing oil trading back towards yearly highs, at that point, the macro has changed rapidly again, and then we're going towards a posture that, you know what, they're going to have to keep fighting. They're going to have to keep slowing down the economy. And even though they don't want to, they have no choice but to continue tighten. That's not the direction that we've seen over the last 2 months. And it's a long time to be on the wrong side of a trade, right? Coming off the lows over here in June, CTM strong. I put those out on public that the macro could change rapidly towards the middle to end of June. I put that out there in the public so people could see what that real-time analysis was like. That wound up being the very turn over here. And again, now we're back to this indecision point. And we're waiting on the Fed, and we're waiting on future data. At this point in time, though, right, if we see a breakdown, what is this the best breakdown we could give over here? What we looked at yesterday when we were looking at this trend line over here, right, below there? I don't know. Let's look at some horizontal, because I could see it already. You can see my mouse over here. Let me go ahead and start drawing it in. And you could see my mouse, like, it's clear as day. That's some horizontal. Well, that's where price kind of fell down to. Yeah, that's what price fell down to. Let me go ahead and lower this line. You see my mouse over here now? Why am I doing that? Well, for a couple of different reasons. First of all, my eyes were first attracted to that trend line, right? And that trend line, by the way, we just set it off of taking the channel over here, putting that trend line to get the angle, and then moved it down off of this touch over here. But look to the left. You can see over here, this is where we wicked into. More importantly, you see over here, this was an area of also what? Resistance, right? And then over here, that was actually ultimately support. So I'm going to go ahead and just going to put a little box in over here. Let me go clean that up a little bit. All right. I'm just going to go like this and say, all right, that's a lot better look. And there we are. Below there, that opens up the door for some nice movement. Now we talked about how this was, if you were looking to sell, to put in a sell position, it's a good opportunity from a risk to reward, and usually trend line breaks are going to give you much better risk to reward than horizontal breaks. Why? Because they're quicker. You will take more losses. Yeah, you'll take more losses, but your risk to reward is overall greater. So if you were, because this is a downtrend, right? It's a strong downtrend. In a downtrend, trend line break to the downside. Is that a bad trade? Not whatsoever. Is there mixed signals in this one? Yeah. That's why the title of the video is what it is, because it could go either way. We're at an inflection point right now. And by the way, something that I wanted to make sure that I let you all know this morning, that as price became overbought, it has become now oversold very quickly, right? So it's an inflection point. That's generally how the beginning of of trend reversals begin, whether it's to the downside and you see price become oversold, and then as it comes up, price doesn't go straight down, straight up too often. Usually there's mean reversion. As price comes back up, it gets overbought very quickly. It doesn't get overbought generally up here. It gets overbought much quickly, and then you have the continuation of that move. That could potentially be setting up over here, right? Because price became oversold. And again, we talked about it yesterday. It's really dependent on what happens later this week. I think, could it be a non-event this week? That would be a masterful, let's say, orchestration by Chairman Jay Powell if he could walk away, walking the fine line between actually keeping the markets guessing both ways, and then truly letting us believe and understand that the market is data dependent. And basically, he stops people from front running any type of any type of dovish pivot, whether it's hard, soft. So you all are clear. For me, a pivot by the Fed at this point is turning toward a pause. The pause is the pivot. Now, that doesn't mean that the market reacts on the pause. I've seen many instances where the market reacts on the last rate cut. So for example, if the market, if for example, it's nuanced. So a lot of people want black and white. That's not how it is. All right. And a lot of people just tell me what it is. Is it going up? Is it going down? That's not how it works. We're here to help everyone thrive. We're here to help everyone be able to make these own decisions and have this understanding themselves. If you're looking for some type of that's not investing, that's not the market. So we'll just throw that away right now. Now, so the reason I was just getting into that is because I wanted to, as I explain the next few sentences, for you to understand it is nuanced. It's not always the same thing that happens. Often on the last hike of a cycle, that will be where the markets will go ahead and actually begin the pivot. If the markets determine before the Fed announces it that was a mistake, that's the last time they're going to be able to hike. For example, let's say they come in with a 75 basis point hike in September, and then the market realizes that there's no way they're going forward than that. They come in with a 50 basis points in September, odds are that's not a mistake at all. And that opens up the door for November and even December, 25 basis point hike, easy peasy, right? So anyway, I don't want to confuse anyone. I want to bring as much clarity as possible. So, lots of people positioned to the short side, they may be confirmed in their bias, right? And their bias is strong. Right now, we are in a strong downtrend. Right now, we became overbought in that downtrend. And the Fed, they're locked. There's nothing they can do. All as they could do is really, regardless, even though it has little to no effect, is continue to tighten into this hot inflation. And if Powell actually goes ahead and affirms that, then what you're going to see happen over here is a breakdown, and a breakdown with momentum. And if that happens, when I say with momentum, it's a technical breakdown, right? And then for the reasons we looked at, whether it's the trend line over here, whether it's the horizontal support, it would be a continuation over here. By the way, if you did take this short position over here and you have your stop loss over here, as price came into the support where it is right now, what you're doing is you're going ahead and you're moving your entry to break even. That right away has improved your overall risk to reward on the trade. Very often on this type of time frame, you can take a risk to reward of 1-to-1, meaning that if this is your stop loss into your entry, you could go ahead, if the support is right over here, there it is right there, the first area of support, and that's a 1-to-1 risk reward ratio. That's fine. You could take that because as soon as price comes into that support, you're moving your stop loss right here to break even. You've automatically improved your overall risk to reward, and now you have a free trade on, right? Meaning that you're allowed to give it that room to see if it goes ahead and is able to continue on down through here. And if that happens, now you're in a really strong position of power. And that's how you want to trade from, a position of power. So you have the ability to let this thing go and see if it comes down. We have more support down in this area over here. You can see where my mouse is, right? You can see over here, resistance, flipped into support, right? That would be your next area you're targeting. At that point, if you have strong momentum with you over here, you might be looking to go ahead and push that for a test of the yearly lows and even the next leg down, right? Now, I'm not there. I'm waiting for confirmation because of the overhead, let's call it macro. It's not even the macro, the Fed. The Fed hanging over our head this week, and that's why I'm waiting for further confirmation. I want to have or see that the Fed that is saying, you know what, we're coming out very hawkish. And at that point, the price action is going to lead the way, and that opens up an opportunity for a trade. And there we are. Boom, 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 boom. Yeah. So Bitcoin to 19,000. That right there is the introduction to our session over here. And 232 people, thanks for being here this morning. Great to have you. If you're new here, welcome. And if you're not, go ahead and smash the like button, as CTM is live, making sure that we bring as many people clarity as possible, trying to create a positive and supportive environment that people could thrive in. Now, it does help with the YouTube algorithm. It helps other people come into the fold. It helps other people that are able to offer a lot to the overall community. So please, if you do enjoy at any point in time the time being shared, go ahead and smash the like button. That is the title of the video, and that over there is why the title of the video is what it is. People want to take a look at the Bitcoin. Let's take a look right now. Over here, you have on the left side, you have buy side. On the right side, you have the sell side. And right now, we currently are right now, currently holding sell positions, roughly 7-8% into profit right now. And that continues to hold, right? There's no reason. A lot of people yesterday may be seeing price like rise up a little bit. They might have been like or FOMO'd and exited a position or something like that. Nope. We're just, going ahead and we continue to hold that short. And whether or not that short position goes anywhere or not, that remains to be seen. Ethereum, similar situation, but it is now turned a 10% open position into roughly a 4% open position. Again, whether or not this particular trade winds up going anywhere, I have no idea. I don't try to guess, and I can't say to you that like Bitcoin's going to $19,000 or like Bitcoin's going to $22,000 or anything like that. A lot of people really so here's the thing, like a lot of people, I'm trying to frame this. There was a really good tweet yesterday, and it was talking about how Twitter has really ruined a lot of traders' ability to trade the markets because a lot of people are like intent on having some type of prediction out there rather than reacting to the markets. So the way that you want to go ahead and you want to maneuver through the markets is to trade what's happening. It's not having some idea in your head of what is going to happen. Now, if you are investing, channels Conquer Trading and Investing. If you're in investing, you want to have an investment thesis, right? But you're not investing off the 8-hour time frame. This is swing traders time frame. This is for traders. We'll have many other videos or many other sessions that are specific towards like the long-term investment. Like this is not it right here today. And it's impossible to say or to throw out whether you think that Bitcoin is going to 19,000 or 22,000 next. That's just flipping a coin, right? But you can say that, you know, if you're a swing trader right now, that you should be short. Again, we even talked about simple trend line breaks. These are so effective. If you just used a simple trend line break over here, you should be short the market right now. Is there any reason to go ahead and cover? That to me looks like, by the way, it looks to me like, you know, a bull flag. I mean, a bear flag developing. It is sloping slightly upwards and consolidating. So to exit this trade prematurely, that would be cutting my winner short. It is a winning position. It's open into profit, you know, 8%, you know, and to be honest, Bitcoin, except for the short side over here recently into June, hasn't really done much. It's just been, it hasn't been able to really capitalize on any of these long positions at all. They didn't go anywhere. And you can see it's been a very tight range. It has been just a consolidation. You can see it like sloping slightly upwards, but in a very tight range. And none of these trades have been able to go ahead and go anywhere. Maybe this one is. Maybe this open position is able to now make a leg down and test the lows or break down forward. But I don't have a crystal ball. I don't know ahead of time. But I know I'm positioned correctly. And that is the most important. And that's what I'll be able to help you do. If those are over here on the public streams, you'll be able to look at my Ethereum positioning, my Bitcoin position, and know whether or not you're positioned right or wrong. And by the way, we have over here this highlighted in blue. That's signifying there's a sell position open right now. If it were a long position, we could just go ahead and we'll have it like that. And that'll just help you understand and know whether you're positioned with the trend or against the trend. Same thing on Ethereum. Same type of analysis, only except the difference between the two was that on this up move over here, and by the way, that was coming off a massive, beautiful position on the short side. But on the upside, Ethereum was able to make huge profits, 52% profit, and is now short the market. And it's short the market holding, again, just that doesn't really line up so well. So look at that, though. This is all important, and it's like little things and takeaways. Instead of going like this, right? Because I would say around over here that broke down and that made a higher high and was faded. A better look at that point was this. This is not how I'm trading it, but connecting the lines like this. And I could say by the time price broke down over here, if you're not short, you're on the wrong side of the trade, right? And this trade showing a little bit actually more oomph to the upside. And that is also a little bit... I know it's ugly out there. I'm not trying to anyone who has an overly bearish opinion on the markets. I get it. That makes total sense. But at the same time, you have to pay attention to the macro and the whole, well, the Fed is tightening because of inflation narrative that people caught up to late in, May, June. And that's when everyone embraced. You got to sell all the rips. Again, by the end of June, with that with that late in July, the 9.1 CPI print, well, that was changing. And you had to be watching the prices of different assets in commodities, oil, food related commodities. They were all coming off 20, 30%, right? So you can't just get like stuck into the markets are not easy. And if you just get that's why I think people enjoy narratives, because it makes them feel comfortable where they could just take a position and then hope it happens or something but that's not what all you are going to do. All of you are going to be able to go ahead and make sure that you're able to go ahead and do your best to go ahead and simply, first of all, lose your bias. you have a bias. I have a bias, but the more I'm aware of my bias, the better I am able to manage it. Right? You could even see that displayed this morning when I looked up at the Euro Japanese yen. My bias going into that was I wanted to set up a long Japanese yen position against the euro. But then when I started looking at the chart and I saw, well, there's no signal here, it's very indecisive, and I caught it by my tone. My tone got less certain, right? And that's the thing. It's learning to go ahead and understand yourself that's going to help you participate more successfully in the markets. And it's always a learning process. Yeah, I've been at this for 24 years, and it's always every day is a learning opportunity. We are students of the markets. Khalid, so that's a good question. I think you're talking in relation to these open positions over here on Ethereum, on Bitcoin. And right now, as it is, it's methodical, meaning there's no discretion involved. And as it is right now on this momentum-based system, there is no movement of the stop loss. Now, we spent yesterday, after I got offline with you during our work session, I was presenting to everyone, I said, hey, listen, it's very far and few between anytime we make any type of adjustment. You don't want to tinker with something that is this good. But at the same time, and I put up, look, I think that the next adjustment over here is moving stop loss to break even. And I spent the whole session, I spent the first third of the session presenting on that and where it was. And well, for a Bitcoin, it was, do you see the hesitation? That it hasn't been discerned that like the green light, and that's an adjustment that is going to be added in. And at any time, the only time an adjustment made is something if it's mechanical. But on Bitcoin, it appears closely that it's 10%. Profit moves 10% into the favor, whether it's on the buy side or the short side, to move your stop loss to break even. On Ethereum, it's a little different. Yeah. And it seems to be 15%. Doesn't change the results at all. If you change it to 10%, when profit moves in 10%, and you go all the way back to Ethereum's inception, it like slightly drops the return. I'm not sure about that. And it's slightly increased the drawdown. So there was really no advantage of moving the stop loss. Bitcoin, could you say that there's an advantage to move the stop loss of year over year and throughout all the history if it slightly improves the return and slightly improves the drawdown? Yeah, you could say that. That's why it's not yet a green lighted. So there's no clear benefit to moving the stop loss. And the only real benefit is more psychological from the person trading the system. But you don't want to make any type of adjustments that are, let's say, a psychological advantage to the person trading the system. The thing is the system does a lot of things that are counterintuitive to a lot of people, and that's why it's successful. So I hope that's a little, I hope that's helpful over there, Mountain Initiative. Great to see you here this morning. Great morning. Good morning. I agree. You know what? One of the exercises I try to do is make sure that I don't respond. We're incentivized to be toxic on Twitter. There's no question about it. And if you take a toxic posture when you tweet, like, you'll get way more interaction, but you're fostering negativity inside yourself. It's very hard to be a positive influence out there. And then more important, it's very difficult not to reply to a lot of things in a toxic way. You have to find yourself. You have to be the change, and it takes work. And that's almost the theme of today also, is that to be successful in the markets, it takes constant work. So anyone who's willing to put in the work, I'm glad that you're here. It is good that you're here. Let's take I was looking at the metals this morning, and we could see that clearly. I'm on the 8-hour time frame. I'm looking at 2020, and I have to be honest, my expectations were that, well, let me start off. I mean, I took a physical gold position and silver position well over a decade by now. And that's not really working out well. I don't think it's kept up with the rate of inflation. It was supposed to protect my purchasing power. It hasn't really done that right now. Now, I understand, by the way, that these instruments are the most heavily manipulated instruments in the world. And I do personally believe there will be a time in the not so distant future where we look at gold being repriced, right? And we could see, let's see, chess pieces at work towards making that happening, including the gold exchange in Shanghai, including Saudi Arabia making a gold refinery in the kingdom right now. And there could be a day that gold is repriced, but as it is right now, it's heavily manipulated. And when I look at the price of gold over here right now, the next things that I want to look at with you is going to be gold and then Ethereum, Bitcoin cross. And they both tie together, right? And one of the things that I've noticed or believed was really strong signal is that as the Fed begins their rate hike cycle, that tends to be a golden buying opportunity for gold. And the reason that it tends to be a golden buying opportunity for gold is that you're looking at then the countdown to growth slowing beginning. And it's that cycle is the Fed begins raising rates. Usually it's into a strong economy. It's debatable right now whether or not they're hiking into a strong economy or not. And it's very complicated. And I think that anyone who believes that they have the answer to that, in my own personal belief, is that you're wrong. I think it's way nuanced. And I think that we are in unprecedented times. And it's not simply only because inflation is running super hot. There's many other factors. Now, normally when the Fed begins hiking interest rates into a strong economy, over time, it begins to slow down the economy. And then, these growth opportunities, for example, tech and things like that, they're no longer in favor. And what is in favor is the shiny stuff, is in gold. That's not what we're seeing since, it wound up over here October 16th. We are getting ready to taper our QE purchases. This was the green light from the Fed. And then they went into March. And then in March, they began their first rate hike. And then since then, gold has sold off. So that's a surprise for me. And that's why, regardless of whatever you're feeling, whatever your thoughts are, you have to trade what is happening. We were able to, going off the 3-day over here, we were able to look at like this. We're able to go ahead and we did two things, right? This was shown on our first live stream. We had this trend line over here, and then I cloned it like this, and I went like this, and then I went back to the candles, and off of this wick over here, I lined this up, and I said, all right, this looks like an opportunity over here as prices come in back into here to take a long on gold. If you were interested, that was qualified if you wanted to, as price over here is coming into this line of support and now resuming off, that's an opportunity to take a long on gold. And the way that I looked at managing the risk was off this lower trend line over here. I went like this, and I said, all right, you got to give the trade room. Over here, you're wrong. And since then, you've seen price break down, retest, and now it's seeing if it's going to resume lower. Now, that was wrong in the sense that, well, you know what? This is probably over here. When I saw price break down right here, you see the break down, came in for that retest, and then resumed down. That would have been a better exit than down over here, right? So the initial trade should have been started with entry, exit, and that's how the position size was set. But in real time, I think, and again, this was followed from afar because when I said asterisk, if you're interested, I was not interested in taking a gold position over here. So anyway, just in learning, right, and always looking at the opportunity to learn, a better exit would have been after the breakdown, the retest, and the resumption down. That would have been a better exit. All right. So gold does not look good. Gold is showing to us that it's in and continues to be in a strong downtrend. And does that mean that we are not looking at right now a like growth slowing down. I'm just throwing it out there, right? And then you could look at, and I want to look at with you, Ethereum, the Ethereum Bitcoin. And let me pull it up on the big chart over here, right? Ethereum versus gold. I'm not going to look at that today. And let me go ahead and maximize this, right? And so, I'm looking at this chart over here, and this is, let me pull up a 3-day first. Is that saying to you, or risk on or risk off? And it's saying to me right now, this could roll over. Let me come back to the 8-hour. Like, if this were to roll over, and I think could we look at putting a trend line in, or would you say that trend line already broke? Yeah, right. That definitely broke down. That's when we took those short positions on both Bitcoin and Ethereum. I don't think they've been open that long. That's the 19th of August. Shortly thereafter, but not at that time. The positions on Bitcoin and Ethereum were opened up a little ahead of that. But going off of the broad strokes used on Ethereum, Bitcoin, this is still in an uptrend. This uptrend has caught a lot of people off. And you can see over here, this is coming into June, the collapse over here of things like 3 Hours Capital, Celsius, and the contagion that took place off the space coming off the Luna collapse. You can see this is when you're super risk off, and Bitcoin leading the way and strongly. And this is where we started talking about, well, watch out. If you were looking for capitulation, we're looking at price off 52% in just a matter of weeks. That's what capitulation has looked like in the past, and why we're not saying we can't come down and make a lower low. We have to follow the macro, and the macro could change rapidly. And sure enough, since then, the macro has changed rapidly. This is not indicative of a bearish environment right now. This is showing lots of risk on. And could you say that it's because of the upcoming merge? You can, and I could say that there's a little extra oomph in Ethereum step and compared to Bitcoin because of the speculation taking place to people looking for a buy the news, sell, buy the rumor, sell the news. At the same time, I've seen charts of showing NASDAQ futures versus Ethereum US dollar, and the charts seem to be showing that nothing special is happening. This is only a risk on move, and this chart continues right now to look like it is risk on. I'm looking right now for where would be some really important breakdown levels, but instead of doing that, I'm just going to wait, and if this thing flips red, we're going to say that now we have momentum to the downside, and there we are. So, Jay-Z, I don't know what, more importantly, how is the market's reaction going to be to some type of loan forgiveness, and will there be any type of reaction to loan forgiveness? Those are questions that I'm asking myself and wondering. So far today, we're looking at, let me just take a look here at the markets. We're looking at the dollar continuing to be very strong. Equity markets unchanged on the day, and oil continues that move up. I want to take a look at oil really quick. So let me jump over to oil. And you can see that oil is right 96 is I think the level that we have. What do I have that? $95.5. That's the resistance we're looking for, and trying to keep out of any type of chop, break above there. And it looks like that oil has room to go up. And these are coming off of, first of all, something macro related. It was the Saudi Arabia saying that they're not liking the futures price of oil. They believe it's disconnected from the physical market, but more importantly, they're not happy with the US and EU working towards any type of agreement with Iran. And then they said that, you know what, we are going to cut production, or we're looking at cutting production because we're not happy. And oil is reacting so far positively off that. And you could see a breakout begin off of this descending wedge, right? Technically, it's set up for a big move. And it seems to, all the fundamentals seem to be pointing towards a much higher oil price. Yet, oil has been an enigma for a lot of people that really, a lot of energy traders, they haven't been understanding it. We did a fantastic job off the breakdown at 119 and making sure that we saw that breakdown and then doing our best to stay in the trade. That's why we've been able to give it a little room over here on the upside instead of taking a normal trend line break. Now, at the same time, even though it's been great and nice, the macro could change rapidly again. This is one of the red flags that we look out for if we start seeing oil beginning to rise. And it's not just us. The Fed mentioned that in the meeting minutes released last week. They said that even though CPI is coming down right now, it's because of things like other commodities, specifically oil, that could change. If you see a rebound in those prices, that's going to be reflected in the CPI. Now, not in September CPI. September CPI, from my viewpoint, should come in lower than 8.5%. Then you're going to have two in a row. But that does not mean going forward that trend is going to continue. That could easily reverse back. And that's why we track over here what's going on with oil. Simon, we got an amazing session prepared, and it was all prepared yesterday. I'm looking forward to it. I'll see you in a little bit. Jay-Z, yes, for sure. I've been watching the euro as it breaks down under parity. Let me find a place to pull up with you. And you can see over here that break below parity. And not only that, I mean, how does that look? This looks like, is that sustainable? I don't know. The momentum's there. Very late to obviously take any type of position here on the euro US dollar. More importantly, Jay-Z, I'm going to point it out again where I went wrong. And this over here is CTM all day long. You're looking for downtrends. And this is, my friend, this is a definition of a downtrend. And then not only that, look at this area over here, that support. When that breaks down, that support is expected to be what? Resistance. And then price came all the way and retested that resistance. And CTM all day long is in downtrends selling resistance. And that right there was a beautiful opportunity. This was a beautiful opportunity to initiate a short position, stop loss above the high. That risk to reward, right? Look how far, it's already over 3-1 in favor. And there was no reason yet to exit that trade. You could only have tightened the stop loss up since then over here and holding on to a beautiful trade. And I actually enjoy really reviewing what I missed and where I went wrong, because that will help me going forward in real time to hopefully not make the same mistake again and be a little bit more observant when such a layup is involved. But that trade has happened. Like the last entry for that trade, the last potential entry for that trade was, around like August 10th, 11th, 12th in that area over here. That is passed by. We don't chase trades. Oh, Mount Gox was bought up earlier. I wanted to actually mention that. Someone, was talking about the potential release on Mount Gox of 140,000 Bitcoin. That doesn't seem to be what is actually happening, right? There's not going to be this month 140,000 Bitcoin released onto the market. It's very nuanced as far as whether or not people will receive the Bitcoin. People are going to be receiving cash and what they're going to do with it. But why that's something that continues to overhang the market ever since I can remember. That is not in August. That Bitcoin is not going to be in the hands of the people, the creditors. It has to go through verification process. It's going to be a third party, not coming from the person overseeing the creditors' lawsuit. It's not happening in August. So I know a lot of people like to buy into things like that, especially maybe if you are like not trying to trade what's happening, but just embracing a bull or a bear case. But that's not what's happening. So careful out there. Crypto is known for lots of, let's say, powerful entities really using media outlets to go ahead and trick people. Yeah, that's how it's worked ever since I remember. So during a split, the benefit is obvious, but what would be the benefit of buying Ethereum before the transition to proof of stake? It's a great question. And so again, it's my opinion. I'm going to just share my opinion with you that pretend we didn't have this breakdown and pretend that Ethereum was still running this open position over here. By the way, this position was holding a 69% open profit, and it only was able to capitalize on and book a 52% gain. That's with no leverage, and that's how it works. Always on a momentum-based system, you're not catching the top. You're going to be giving back some of those gains before the exit. But let's pretend there was no breakdown and that this was able to continue running up until the merge. Now, first of all, before the breakdown, I gave my own personal view on that, my own personal opinion, and you don't have to agree with my opinion at any point in time, but I hope that you learn to use it as a reference to help form your own. So it could be, I hear what he's saying, and that clarifies my own opinion, that I see it even more clearer, right? Or, oh, I didn't look at it that way. And yeah, okay, I could see that. That makes a lot of sense. That's what you're looking to do, right? Is to use that beautiful ability of critical thinking. And so what my own personal assumption was that if we went and ran into the merge and it was a successful merge, that it wouldn't be necessarily a sell the news event, that it would be dependent on what was happening in the overall markets and whether or not the current risk rally was continuing. Now, I could say that was proof correct because all of a sudden that risk rally came to an end across the markets, right? We could look over here. That risk rally came to an end and Ethereum stayed in step, right? So that's like a breadcrumb, a clue that, yeah, that's probably, if that we didn't break down on risk, that Ethereum would still be running. And I could make the assumption that if it was a successful move to proof of stake, that the same thing would happen, or that the market might even actually view that as a positive thing because of the whole narrative as far as proof of stake being good for the environment or whatever you want to talk about. The market might view that as a positive thing and that rally could continue. But a lot of people did try to go ahead and buy the rumor. A lot of people are positioned through the options market to take advantage of that. And they were able to go ahead and have some nice long positions. Incidentally, max pain on that is 1350. That's where the most people would lose money on those options they're holding. Now, does that mean that price is going to be attracted to here, or it's going to be pulled down to here around the time of the merge? Maybe. I have no idea. I think that there are bigger forces at play, and those bigger forces are the Federal Reserve and its policy. And I think that where Ethereum ends up a month from now is going to be really dependent on what happens first in Jackson Hole this week, then next Friday with the job numbers, and then the week after with the CPI. That's going to really let you know where Ethereum is going to be. But a lot of people did choose to go ahead and buy the rumor. And those people also probably, if they're in the money, will take that profit on the news, whether it's a sell the news event or not. So I hope I answered that question well. That was the benefit. That was the benefit, Emmett. Is the benefit would be a lot of market participants like to buy the rumor, sell the news. It happens so often. You could use like the launch to the mainnet of EOS as a perfect example of a buy the rumor, sell the news of event. You could look at during the bull market of 2021, the first upgrade on Cardano being a buy the rumor, sell the news type of event. These things happen over and over and over again, always. It's why I thought we were going to actually see a buy the invasion type thing that occurred over here, right over here. I thought this was going to be a buy the invasion type of event after the Fed over here raised rates. And it's not how it played out, though. There was a little bit of a rally, but that rolled over and that was sold very, very quickly. And again, that was a mistake on my part because my positioning wasn't, again, after that rally, that was very good. But this very bad in positioning after the breakdown of the low, which you could also say, well, that worked out well because you were able to position around here. But the proper place to sell that would have been way up here. And I'm happy to look at where I get it wrong so that hopefully next time I don't. But as far as the benefit, that's the benefit. People speculating, I think that they got lucky. It had nothing to do with buy the rumor. Maybe there's a little extra premium built in there. It's hard to argue with that, and I completely agree. I think that Bitcoin lacked on the way up over here because probably a lot of money at this point was going into Ethereum, and that makes perfect sense to me. But I think that the only reason that this trade went, into a nice takeaway was because of the macro, because of the risk rally that took place in the markets. All right. So, right, I'm not up to the news. I'm not, right, very from afar. I follow all these things, and it provides a huge benefit because my focus is on price, and I believe that price is everything in. But yeah, I saw something from I think it was Lynn Alden mentioning something about that. Andrea, I would go to on Twitter, Lynn Alden, look through just her recent timeline, and you might find a post about that, and then you could read the comments for a little bit more information about there. But from my understanding, that was considered to be signal. All right. Woo. Everyone, thanks for being here this morning. Thanks for sharing in this time together. I hope you found it fruitful, and I know that I did. Grateful to be spending this time here with you all. I hope you have a beautiful day. Before I say goodbye, I'm going to throw up a little bit of honeymoon just in case there's something I want to come back and say to you all. And then even if it's just simply have a beautiful day, that right there in itself is also very, very important. Yeah, I agree, Jay-Z. right, everyone. Thanks for being here. I hope you have a beautiful day. Emmett, I think it's a good thing for 2022 here. CTM doing its thing. Help as many people stay on the right side of the market. JD, when we earn a boom, we'll get a boom. That's for sure. Have a beautiful day, everyone. I think, you know what? This was my favorite session so far of the week. And we have the least amount of likes. So, listen, whether or not is how we're received here, as far as doing this Monday through Friday, Daily JD. Play your part, smash the like button if you enjoy being here. Lots of love, everyone. Have a beautiful day. See you tomorrow.